Hey everyone, it's May 30th, middle of the trading day in the U.S. I am Mish Schneider, the Chief Strategist of MarketGauge.com, coming to you with hopefully some actionable futures information for you to employ tomorrow, which would be actually later for you guys. So let's take a look here and start with gold, because we're looking at the June contract of gold. And when I spoke to you last time, we talked about that reversal top. We talked about how we can correct 10% or so, actually has gotten down, not quite 10%, but we also were looking at that 1948 to 1950, broke through it. And now, as I'm speaking to you, it looks like the futures closed back over that 1950 level, but some congestion coming in really right around here. So here's how I would be looking at this coming into tomorrow. If we are holding up at 1955-ish, 54, 55, I would be a buyer. I think right now, if you're looking again at reversals, although it's not showing it as strong here because it's not a new high or a new low, it is indeed a new 60-plus day low. If you look at this low and you go back to the last time it was trading here was in March, that's more than 60 days ago. So that's a legitimate reversal pattern, but we know with all reversal patterns, as I've shown you last week, let's say in wheat, which should have prevented you from getting into that, you need confirmation. So confirmation would be not only a hold of 1954, but also I would like to see it clear the high of this day, May 30th, and that would be, let's call it 1963, 1964. If that happens, I see no reason why we can't take a visit to the 50-day moving average. We can reevaluate at that time. And of course, with things being very messy here in the U.S., politically and even technically, with some sectors really doing poorly while AI and tech continue to fly, this could be reflected with a move over the 50-day moving average, because gold loves that uncertainty, and then we can proceed back to being super bullish intermediate term. Now moving on to West Texas Intermediate crude oil. Really interesting. So as I'm giving you actionable information and showing you charts, I'm also hopefully giving you some education in terms of using things like reversal patterns, areas of congestion as resistance, things that need to hold for support, and also moving averages. So here we have a 50-day moving average. And when I reported to you last week, I said that the U.S. oil futures had broken above its 50, but not the July contract. And so here we are. Look at this. I mean, this is not technical. We broke it through, but this bar right here shows on a closing basis couldn't make it. So no surprise now that we would be failing. Now we did have a reversal pattern down here all the way at around $64 a barrel, but at this point now momentum looking pretty heavy, and I would say you might get another bounce from those levels, but if this continues to break down under $64 a level, then I think not only does that make that case for gold again, but it also means that a lot of the equities and even the indices, even the ones outperforming, should start to get more worried about the recessionary issues that have been coming a lot in the news but have yet to pan out. So interesting that I have shown you natural gas, but this is actually the UK natural gas futures chart. And what I find fascinating is a couple of things. Number one is I've mentioned to you that we like to see two closes above a major moving average. We got the one close here, and it didn't happen, and obviously you can see a very steady downtrend. Number two is we haven't really been, well, we had a death cross here, but we haven't been above this moving average really since 2022 in December. So we've been in this very long, year-long downtrend, which means you can still look to sell rallies. However, what I am finding interesting is once you see this little half smiley face right here, that's a reversal pattern potential, right? So look at the volume, not unbelievable, but okay. And then also, with this contract being closed now, again, we're going to want to see some kind of follow-through here in terms of a move above the high of the day on this day, which is, let's call it 58.34. Now let's move over to the other natural gas futures contract. Now on this one, you can see we had that reversal pattern, and we talked about it, and you had that nice little move. You actually did get a fake out here with 2 closes over the 50, but then failed it immediately, which I had mentioned that would be a good opportunity to get out or go short. And so now here we are about to test this low at 223, let's call it 2.23. So once again, there's a couple of things to look for. In terms of the UK natural gas, it's showing a little bit more relative strength. This is actually getting a big volume pattern on this down day. So if we do not break down under these lows, 2.24, and we start to move back up to 240, I would say probably would be a good place, then it could be we went from a reversal pattern with UK actually showing some kind of relative strength compared to this particular contract, and a potential double bottom. And then of course once again we'll be looking at that 50-day moving average, because the second time we go through may be a little bit more follow through. And watch your volume patterns, because when you get these type of volumes on down days, it could be that the selling is drying up, along with the fact that it might be holding this key support. Okay, let's move on to the dollar. So the dollar, my goodness, this was the classic technical lesson. Everything worked out. Not only did you have a reversal pattern here, but it never took out the low from here, causing some kind of a double bottom here. Lots of sideways action, many closes above the 50 with some follow through, and now getting into the congestion level. So once again, the dollar is going to be key, especially as we've talked about the gold, although I always want to remind you that not the most important relationship, dollar to gold, but nonetheless something to consider, particularly with other commodity futures. And look at all these closes that we have, this bar being a close. All these closes we have around 104.20. And so with 104.20 as a key area for closes, that would tell me that above 104.20, especially if we get intraday movement to the upside, we still have more. Whether it gets to 105 or what I think is the ultimate goal around 106, maybe just a little bit shy, figure somewhere between 105.75 and 106, that would be more likely over that 104.20. Under 104.20, I would look to see what happens at the next major support at 103. And of course, if we break down under 103, we're back looking at its 50-day moving average. And of course, as I had mentioned on the monthly chart of this is still holding up in an uptrend until it breaks down, or if it breaks down, under 100.70. So indeed, we're seeing the stress here in the pairing of the British pound against the US dollar. Again, one of these beautiful reversal patterns. I mean, these futures contracts are so great for charting because they get really good follow through, whether you're doing it as a day trade or if you go home with a winner, keeping some overnight. But now we've bounced off here. Again, we're showing you around that 104.20 level. And the pound has come back, but only insofar back up to the 50-day moving average. So this would have to be a breakout over 125 for me to feel more confident in the British pound, and under 123 I think that you would get into more issues, and we'd probably be seeing that dollar over that 104.20 level. In terms of the optimism of the debt ceiling, I think that people are very narrow focused, still has to get through a lot of votes, but even if it does pass, there are other implications that will be coming up, namely a June Fed meeting. So I would not say one event, unless we completely default or we get completely downgraded, is going to be the end-all be-all to what's happening. There are a lot of factors in this market the market's trying to digest, and I think the bigger one and the biggest one is going to be what happens with the U.S. consumer market, which right now is really struggling. So let's move on to look at the yen. So hopefully by now you're all saying to yourself, as we're looking at this chart, that it's possible that we saw a reversal pattern in that the yen has gained strength against the dollar. And look at the volume here, big volume coming into this dump. So I would definitely be keeping my eyes on the relationship between the dollar and the yen, and probably looking at this point now, if we get through this, that would be a breakdown once again in the dollar, probably under that 104.20 pivotal, and maybe closer to as we get to 103. If we actually go out just a little bit further here, just to show you where the yen has been, you can see that right now 142.14 or 13 would be a good area of resistance next. And we haven't been up in these levels since October 21st, 2022, that was when, of course, the U.S. had its big move lower. Let's just move into the softs here for a moment, talk about sugar. Once again, remember we talked about the reversal and that it measured down somewhere to around 24. That's where the 50-day moving average sits. Right now, we've had a little bit of support and stop here at these lows at 24.60. So we traded up a little bit. This is, of course, the July contract. But again, we're in the middle of nowheresville. I would either want to be a buyer on another test down here or closer to the 50, or if we can get back over 26, then I would say we got close enough to that 10% correction. Remember, it could be anywhere between 5 to 10% after we have a reversal pattern, in which case, if that starts to turn and takes out 26, I would be a buyer of sugar, anticipating that that march could continue, especially if the gold prices align and the dollar starts to weaken. But again, dollar being the X factor. Let's take a look at a couple of the grains. If I had to choose one, I would probably look at the corn futures. Seasonally, we're in the season. We're starting to get heat waves here in the U.S. The soil crop situation is still kind of wonky here. And corn, again, another beautiful setup, right? So your reversal pattern got a nice move up to, guess what? 50-day moving average. We did not get through. However, I would be looking at that level at around 606. We get 2 closes above that. That could be the start of a good summer rally, so keep your eyes there. Where would I consider myself wrong? It would be if we had the 2 closes, whatever the low is of the day, it clears. If it breaks down under that, that means that that 50-day moving average that broke out and confirmed, like we saw in the U.S. natural gas, has actually failed. Hope that was helpful. Y'all have a great day. Thanks so much for watching. Bye for now.